you know. There are moments in life when the market whispers secrets to those who are willing to listen. And in those whispers lies the difference between those who build empires and those who merely watch them being built. Today, at this very moment, while most sleep through their destiny, 3 companies are moving in the shadows of pre-market trading, telling stories that have nothing to do with stocks, and everything to do with how you see the world. Let me tell you something about iRobot that nobody's talking about on those financial channels. See, when you hear iRobot, your mind probably goes straight to those little vacuum cleaners rolling around people's homes. And that's exactly the problem. That's surface-level thinking. That's the kind of thinking that keeps people poor their entire lives. I've spent decades, more than most of you have been alive, watching companies rise and fall. And I'll tell you what I've learned. The ticker symbol isn't what matters. The pre-market movement isn't what matters. What matters is what that movement represents about human nature, about value, about the invisible forces that govern wealth creation in this world. iRobot's moving in the pre-market. Up or down, it doesn't matter to me right now. What matters is why you care. Are you chasing? Are you reacting? Or are you thinking? You see, there was a time many years ago when I watched a young man lose everything he had. Not because he was stupid, not because he didn't work hard, but because he confused fey activity with his wisdom. He would wake up at 4 in the morning, before the market opened, watching every tick, every movement, every piece of news. He thought he was being diligent. He thought he was being smart. He was being neither. He was being frantic. And the market smells panic like a shark smells blood in the water. iRobot represents something deeper. It's a company that tried to put automation into the home. Noble idea. Revolutionary even. But here's what the geniuses on Wall Street forget: innovation without profitability is just expensive entertainment. I've seen it 1,000 times. Brilliant minds building brilliant things that nobody can figure out how to turn into sustainable wealth. And that's the first lesson today. You want to know why most people fail with their investments? It's not because they picked the wrong stocks. It's because they never learned to distinguish between what's exciting and what's valuable. Those two things, they're as different as lightning and lightning bugs. Think about it. Really think about it. When you see a stock moving in pre-market trading, what's your first impulse? Be honest with yourself. Is it curiosity? Is it fear of missing out? Is it that little voice in your head saying, maybe this is my chance? I'll tell you what that voice is. That's not wisdom talking. That's your ego. Your ego wants to be right. Your ego wants to tell your friends at dinner that you caught the big move. Your ego wants to feel smart, feel quick, feel special. But wealth, real wealth doesn't care about your ego. Real wealth is built in the silence, in the patience, in the boring, repetitive application of sound principles over decades. Let me take you back for a moment. 1962. I wasn't famous. I wasn't on anybody's radar. I was just a lawyer who'd figured out that the real game wasn't in the courtroom. It was in understanding value. I watched men twice my age, 3 times as educated, make the same mistakes over and over again. They would chase trends. They would buy what everyone was talking about. They would sell the moment fear crept into their hearts. And I made a decision then that changed everything. I decided I would rather be right and lonely than wrong with company. iRobot's Premarket movement. It's just noise until you understand what you're looking at. Are they solving a real problem? Are they doing it profitably? Do they have a competitive advantage that will last? Or are they just another shiny object in a world full of distraction? Most people can't answer those questions because they've never asked them. They're so busy trying to get rich quick that they never slow down long enough to think about getting rich. Right. Now let's talk about Las Vegas sands. Here's where it gets interesting. Here's where human psychology reveals itself in the most beautiful and tragic ways. Gambling, entertainment, luxury. Sin, if you want to call it that. Las Vegas sands is in the business of creating experiences, of selling dreams, of building temples to human desire. And before you judge that, before you get all moralistic on me, understand this: every business on earth is in the business of fulfilling human desires. The only difference is how honest they are about it. The casinos, at least they're honest. You walk in knowing the odds are against you. Most businesses aren't even that transparent. But here's what fascinates me about Las Vegas Sands moving in the Premarket. It's a mirror. It's reflecting back to you your own relationship with risk, with reward, with the seductive whisper of easy money. I've met thousands of investors over my lifetime. You know what separates the ones who made it from the ones who didn't? It's not intelligence. Some of the smartest people I've ever met died broke. It's not education. I've seen PhD economists who couldn't manage their own portfolios. It's temperament. It's the ability to sit still when the world is going crazy. It's the ability to act when everyone else is paralyzed with fear. It's the ability to see a casino stock moving in premarket trading and not see a stock at all, but to see a business, a model, a set of principles that either work or don't. There's a story I think about often. An old friend of mine, long gone now, he used to say, the stock market is a device for transferring money from the impatient to the patient. He was right. But it's more than that. Life is a device for transferring wealth from those who can't control themselves to those who can. Las Vegas Sands knows this better than anyone. Their entire business model is built on understanding human weakness. People walk into those buildings believing they can beat the odds, believing they're special, believing that this time it'll be different, and the house just smiles and waits. Because the house knows what most people refuse to accept. Math doesn't care about your hopes. Probability doesn't bend to your will. The odds are the odds, and over time, the truth always reveals itself. Now, do you see the parallel? When you're looking at pre-market moves, when you're thinking about jumping into a position, when you're feeling that rush of adrenaline, you're not that different from the person putting chips on the roulette table. You're both gambling. The only question is whether you know the odds. The great investors, and I mean the truly great ones, they don't gamble. They calculate, they don't hope. They analyze. They don't react, they prepare. I learned this the hard way. Cost me money, cost me sleep, cost me years of my life worrying about things that didn't matter. But eventually the lesson sank in deep enough to change me. And here's that lesson. The pre-market move isn't the story. The story is what that company has been doing for the last 10 years. The story is what they'll be doing for the next 10 years. The story is whether their business model makes sense in a world that's constantly changing. Las Vegas Sands, they've had to adapt. From domestic gambling to Macau to Singapore, they've had to navigate regulations, cultural differences, economic cycles, pandemics. The stock moves up and down, up and down, up and down. But the question isn't about the movement. The question is about the foundation. Is the foundation solid? Can they weather storms? Do they understand their customers? Do they generate real cash? Can they return that cash to shareholders in a sustainable way? These aren't exciting questions. They're not going to get you pumped up to throw your money at something. But these are the questions that create wealth. These are the questions that separate the builders from the gamblers. And then there's Tilray, cannabis, marijuana, weed, whatever you want to call it. An industry built on changing laws, changing attitudes, changing perceptions. An industry that's captured the imagination of a generation that believes, truly believes, that this is the next great gold rush. Maybe it is, maybe it isn't. But let me tell you what I know for certain. Every gold rush in history has made a few people very rich and left thousands broke and broken. The question you need to ask yourself is which group you're going to be in. When I see Tilray moving in premarket trading, I don't see a cannabis company. I see hope. I see desperation. I see people who've been working regular jobs their whole lives, looking at their bank accounts, doing the math, and realizing that the traditional path isn't going to get them where they want to go. And so they look for shortcuts. They look for the big score. They look for the stock that's going to change everything. I understand that desperation. I truly do. But understanding it and acting on it are two very different things. Let me tell you about desperation. 19. I won't even tell you the year because it'll date me too much. But there was a period in my life when I needed money. Real money. The kind of money that would let me stop worrying about bills and start thinking about building something lasting. And I was tempted. Lord knows I was tempted. To take shortcuts, to chase the hot opportunity, to convince myself that this time would be different. But I didn't. You know why? Because I'd already seen what happens to people who operate from that place of desperation. They make emotional decisions. They violate their own principles. They tell themselves stories to justify doing things they know deep down are wrong. And they lose. Not always immediately. Sometimes they even win for a while, which is worse because it reinforces the wrong lessons. But eventually, the bill comes due. Reality always collects what it's owed. Tilray represents that temptation, that siren song of easy money in a new industry. And maybe there's real value there. Maybe they'll be one of the companies that survives the shakeout and dominates the market. Maybe. But betting your financial future on maybe, that's not investing. That's hoping. And hope is not a strategy. So what do? You sit here reading these words or hearing this message, and you've got 3 companies moving in pre-market trading. iRobot, Las Vegas Sands, Tilray. 3 different industries, 3 different risks. And you're wondering, what should I do? What's the play? What's the move? And I'm going to tell you something that might frustrate you. The answer isn't in those stocks. The answer is in you. The answer is in whether you've done the work, whether you understand what you're investing in, whether you have the temperament to hold through the inevitable ups and downs, whether you're operating from a place of clarity and principle, or from fear and greed. See, most people think investing is about picking the right stock. It's not. Investing is about knowing yourself well enough to make good decisions consistently over time. It's about having the discipline to say no to things that don't fit your criteria, even when everyone else is getting rich on them. It's about being able to sleep at night because you know that your decisions are based on sound reasoning, not emotional reaction. I've watched people make millions on terrible decisions. Luck happens. But I've also watched those same people lose it all because they never learned the right lessons. They thought they were smart when they were just lucky. And when the luck ran out, they had nothing left. And I've watched people slowly, methodically, boringly build wealth that lasted generations. They weren't exciting. They weren't on TV. They weren't the talk of cocktail parties. But they were rich. And more importantly, they were free. Free from worry. Free from the constant anxiety of wondering if they'd made the right call. Free to live their lives on their own terms. That's what this is really about. That's what this is really about. Not the pre-market move, not the hot stock tip, but freedom, real freedom. The kind that comes from making sound decisions based on principles that don't change just because the market's having a bad day. Now, let me go deeper into something most people never consider. When you look at these 3 companies moving in the pre-market, iRobot, Las Vegas Sands, Tilray, you're not just looking at businesses. You're looking at reflections of society itself. You're looking at where we've been, where we are, and where we might be going. iRobot tried to automate the mundane. Clean your floors while you do something else. Sounds wonderful, doesn't it? Sounds like progress. And it is progress. But here's what they discovered, what every automation company eventually discovers. People don't pay premium prices for convenience, unless that convenience is deeply, emotionally meaningful to them. I remember when dishwashers were a luxury. Now they're standard. Same with washing machines. Same with 1,000 other innovations that changed daily life. But the companies that made those innovations, most of them don't exist anymore. Because being first doesn't guarantee being profitable. Being innovative doesn't guarantee being sustainable. The graveyard of American business is filled with companies that had great products but couldn't figure out the economics. And that's the harsh truth nobody wants to hear when they're excited about a pre-market move. The market doesn't care how clever your product is. It cares whether you can make money selling it. I learned this watching the tech bubble of the late 90s. Brilliant people building brilliant things, revolutionary ideas, world-changing concepts. And most of them went to zero, because having a good idea is maybe 5% of success. The other 95% is execution, timing, pricing, competition, financing, management, luck. 1,000 variables that have to align. When iRobot's stock moves, you need to ask yourself, am I betting on the idea or am I betting on the execution? Because ideas are everywhere. Execution is rare. And this brings me to something fundamental about wealth creation that most people never grasp. Wealth isn't created by brilliant ideas. Wealth is created by boring, consistent, profitable business operations repeated over time. The janitor who owns the building makes more money than the genius who works in it. Why? Because ownership of cash-generating assets beats labor every single time. You want to know what changed my life? It wasn't discovering some secret formula. It wasn't finding the perfect stock. It was understanding this simple truth: find businesses that generate cash year after year after year, buy them at reasonable prices, and let time do the work. Sounds simple, doesn't it? Almost too simple. And that's why most people don't do it. They think there must be something more, some secret, some trick, some inside information that the rich people have and they don't. But there's no secret. The secret is that there is no secret. It's all right there, available to anyone willing to do the work of understanding it. Las Vegas Sands generates cash. They take in money from people gambling and spending. They pay their operating costs, and what's left is profit. Simple. Not easy to execute well, but simple to understand. The question is whether they can keep doing it, whether the regulatory environment stays favorable, whether consumer preferences shift, whether they can defend against competition. These are answerable questions. They require research, patience, understanding. But they're answerable. And once you answer them, you can make a decision based on reason rather than emotion. But Tilray is different. Tilray is operating in an industry that's still being defined. The rules are changing. The market is fragmented. The path to profitability is unclear for most players in the space. And that means you're not just betting on the company. You're betting on how an entire industry will evolve. Some people love that kind of uncertainty. They thrive on it. They see it as opportunity. And maybe they're right, maybe. But let me tell you what I've observed over decades of watching people invest. For every person who gets rich betting on emerging industries, there are 100 who lose everything. The odds aren't in your favor. They never have been. And pretending otherwise because you want it to be true is the fastest way to poverty I know. Now, I want to tell you about a man I knew. We'll call him Robert, though that wasn't his real name. Robert was smart, self-made, started with nothing and built a successful career in finance. Made good money, saved aggressively, did everything you're supposed to do. And then one day, Robert decided he was tired of the slow path. He'd been investing conservatively, making 7, 8, maybe 10% a year. And he looked around and saw other people making 50%, 100%, doubling their money in months. And he thought to himself, why am I being so cautious? Why am I missing out? So Robert started chasing. He started buying the hot stocks, the ones moving in Premarket, the ones everyone was talking about. And for a while, for a beautiful, intoxicating while, it worked. He made money, a lot of money. His portfolio was up 40% in 6 months. And that's when Robert made his fatal mistake. He didn't recognize that he'd gotten lucky. He thought he'd figured something out. He thought he'd developed a skill. And so he got more aggressive, bigger positions, more leverage, higher risk. You can probably guess how this story ends. When the market turned, and the market always turns, Robert lost everything he'd gained and then some, not just the profits, the principal. Years of savings wiped out in a matter of weeks. I saw him about a year after it happened. He'd aged. Not just physically, though that too. But something in his eyes, something was gone. That confidence, that spark, it had been replaced by something else. Resignation, maybe. Or wisdom bought at too high a price. He told me, I thought I was smarter than the market. I thought I could see things others couldn't. And maybe I did see some things. But I didn't see the most important thing. What's that? I asked. I didn't see myself. I didn't see my own ego taking over. I didn't see how the early success was changing my decision-making. I didn't see that I'd stopped following my principles and started chasing feelings. That conversation has stayed with me all these years. Because Robert's story isn't unique. I've seen it play out hundreds of times with hundreds of people. The details change, but the pattern is always the same. Success leads to confidence. Confidence leads to risk-taking. Risk-taking leads to disaster. And disaster either destroys you or teaches you. Robert was one of the lucky ones, he learned. He rebuilt slowly and carefully this time. Last I heard, he was doing well. Not spectacular, but well. And more importantly, he was sleeping at night. That's what I want for you. Not spectacular returns. Not the ability to brag at parties. But the ability to sleep at night. The ability to make decisions from a place of peace rather than panic. The ability to build wealth that lasts because it's built on a foundation of principle rather than luck. So when you see Tilray moving in Premarket, when you feel that pull, that excitement, that voice saying, this could be it, pause. Just pause for a moment and ask yourself, am I seeing an opportunity? Or am I seeing my own desires reflected back at me? Because the market is very good at showing you what you want to see. It's like a mirror that way. If you're looking for confirmation that you're smart, you'll find it. If you're looking for reasons to be afraid, you'll find those too. The market accommodates all perspectives until it doesn't. The truth is, most premarket moves don't mean anything. They're noise, static. The sound of millions of people around the world making guesses about what something might be worth before the real trading even begins. And yes, sometimes those moves predict larger trends. Sometimes they're early warnings. Sometimes they're opportunities. But most of the time they're just noise. And learning to ignore noise, that's a skill that will serve you better than any stock tip ever could. Let me tell you about noise. In the early days, before computers, before instant information, before you could check your portfolio value every 5 seconds on your phone, investing was different. You made decisions based on annual reports, quarterly earnings, site visits, conversations with management. You did research that took weeks or months. And then you made a decision and you lived with it. You couldn't check the price every day because the prices weren't available every day. You couldn't react to every piece of news because the news traveled slowly. You had to think. You had to analyze. You had to trust your research and your principles. And you know what? People made better decisions back then. Not because they were smarter. Not because they had better information. But because they had less information. Because they couldn't react to every tick, every rumor, every premarket move. The abundance of information we have now, it's not making people richer. It's making them poorer. Because they're confusing information with wisdom. They're confusing activity with progress. They're confusing being connected with being informed. I see people now glued to their screens, watching every movement, reading every tweet, consuming every piece of analysis. And they think they're being diligent. They think they're doing research. But what they're really doing is drowning in noise and calling it information. Real research is different. Real research means reading annual reports cover to cover, understanding the business model, analyzing the competitive landscape, evaluating management quality, assessing whether the company has a sustainable competitive advantage, calculating what it's actually worth. That work is hard, it's boring, it takes time, and most people won't do it. They'd rather watch a 3-minute video that promises to tell them which stock is going to double. They'd rather follow someone on social media who talks a good game. They'd rather believe there's a shortcut than do the work. And that's fine. Really it is. Because that's what creates opportunity for those of us willing to do the work. The market rewards patience, discipline, and clear thinking precisely because those qualities are so rare. iRobot, Las Vegas Sands, Tilray, they're moving in Premarket. So what? Unless you've done the deep work of understanding what these businesses are actually worth. Unless you have a clear investment thesis based on sound analysis. Unless you know why you would buy and at what price you would sell. That movement is meaningless. Worse than meaningless. It's dangerous. Because it's tempting you to act without thinking. It's triggering that primitive part of your brain that fears missing out. It's making you want to do something, anything, just to feel like you're participating. But the best investors I've ever known, they spent most of their time doing nothing. They would analyze hundreds of opportunities and pass on almost all of them. They would wait, sometimes for years, for the right pitch. And when it came, when they saw something they truly understood trading at a price that made sense, they would swing hard. That's the game, not constant activity. Not reacting to every premarket move, but patience punctuated by decisive action when the opportunity is right. There's another thing I want you to understand. These companies, iRobot, Las Vegas Sands, Tilray, they're not abstract concepts. They're not just ticker symbols on a screen. They're real businesses employing real people making real products and services for real customers. When you invest in a company, you're becoming a part owner of that enterprise. You're betting on those people to execute their strategy. You're trusting that management to allocate capital wisely. You're hoping that the competitive advantages they have today will still be relevant tomorrow. That's a serious responsibility. It deserves serious thought, but most people don't think about it that way. They think about investing like buying lottery tickets. They think about it like placing bets. They think about it like gambling, and so they get gamblers' results. If you want investors' results, real sustainable, wealth-building results, you have to think like an owner. You have to ask yourself, would I want to own this entire business at this price? If I couldn't sell it for 10 years, would I be happy with the cash it generates? Do I understand this business well enough to make that judgment? If you can't answer those questions, if you haven't done the work to answer those questions, then you have no business investing in that company, no matter how much it's moving in premarket trading. I know this isn't what you want to hear. You want the shortcut. You want the secret. You want me to tell you which of these three is the winner. But I can't do that. Not because I don't have opinions. I always have opinions. But because giving you the answer would rob you of the learning. The learning is in the process. The learning is in doing the research. The learning is in making mistakes on small positions and discovering what you don't know. The learning is in developing your own judgment, your own criteria, your own investment philosophy. That's what lasts. That's what builds wealth over time. Not tips, not hot stocks, not pre-market moves, but your own developed ability to analyze, decide, and act based on sound principles. And those principles don't change. The market changes. Companies change. Industries change. But the principles of value investing, of sound business analysis, of emotional discipline, those are timeless. Buy good businesses at fair prices. Understand what you own. Be patient. Don't panic when prices drop. Don't get euphoric when prices rise. Focus on the long term. Ignore the noise. Repeat. That's it. That's the whole game. Everything else is just details. Everything else is just details. And the details matter, don't get me wrong. But if you don't have the principles right, the details won't save you. Let me shift gears here and talk about something that nobody wants to discuss, but everybody needs to hear. The emotional cost of investing. The psychological toll of watching your money go up and down. The way it affects your sleep, your relationships, your peace of mind. Because here's what they don't tell you in those get-rich-quick seminars. Here's what the talking heads on financial television conveniently forget to mention. Investing isn't just a financial decision. It's an emotional journey. And if you're not prepared for that journey, if you don't understand what it's going to demand of you psychologically, you're going to make mistakes. Expensive mistakes. I've seen people make brilliant investment decisions. Buy exactly the right thing at exactly the right price, and then sell at the worst possible moment because they couldn't handle the emotional pressure. I've seen people with perfect analysis sabotage themselves because they couldn't control their fear or their greed. The market is designed to test you. It's designed to find your weaknesses and exploit them. Not maliciously, it's not personal, but structurally, systematically. The market rewards emotional discipline and punishes emotional reactivity. Think about iRobot for a moment. Let's say you'd bought it a few years ago when everyone was excited about the future of home automation. You had a thesis. You did your research. You believed in the company. And then the price dropped 30%, 40%, 50%. What do? Your analysis hasn't changed. The business fundamentals might have weakened somewhat, but not enough to justify this kind of price decline. But you're watching your money evaporate. Every day you check, it's worth less. Your spouse is asking questions. Your friends who told you it was a bad idea are looking smarter by the day. That pressure, that psychological pressure, it's real, it's intense. And most people can't handle it. They sell. They take the loss. They tell themselves they're being prudent, cutting their losses, living to fight another day. But really, they're just capitulating to fear. And then, of course, 6 months later, the stock recovers. A year later, it's back to your purchase price. 2 years later, it's up 50% from where you bought it. And you're on the sidelines, having locked in your loss, watching others make money on the very investment you abandoned. This pattern, this tragic pattern, repeats itself millions of times across millions of investors every single year. And it's not because people are stupid. It's because they're human. Because we're wired to feel losses more intensely than gains. Because uncertainty creates anxiety. Because the primitive parts of our brain that kept our ancestors alive on the savannah are terrible at making investment decisions in modern markets. Understanding this about yourself, accepting this about yourself, that's half the battle, maybe more than half. I'm not immune to it, never have been. I've felt that fear. I've felt that temptation to do something, anything, to make the discomfort stop. The difference is, I learned to recognize those feelings for what they are. Warning signals, red flags, signs that I'm about to make an emotional decision that I'll regret. So I developed rituals, practices, ways of managing my own psychology. When I feel that urge to act, I force myself to wait 24 hours. I write down my reasoning. I ask myself, am I reacting to price or am I responding to fundamentals? Has something changed in my analysis, or am I just uncomfortable with volatility? Most of the time, when I go through that process, I realize I don't need to do anything. The urge to act passes, and I'm grateful I didn't act on it. This is what Las Vegas Sands should teach you. Not about the gambling industry, not about Macau or Singapore or resort operations, but about yourself, about your own relationship with risk and uncertainty. Because when you see that stock moving in Premarket, what you're really seeing is a Rorschach test. Your reaction tells you everything you need to know about your current psychological state. Are you feeling confident? Are you feeling anxious? Are you feeling left behind? Are you feeling clever? Whatever you're feeling, that feeling is going to influence your decision making. And if you're not aware of it, if you're not compensating for it, you're going to make mistakes. I knew a woman once, sharp as they come, brilliant analyst, could read a balance sheet like Mozart read music. But she had a problem. She couldn't stand being wrong. Her ego was wrapped up in being right, and that made her dangerous to herself. She would make an investment, and if it went against her, she couldn't admit the mistake. She would hold on, convinced that eventually the market would see what she saw. She would add to losing positions, averaging down, telling herself it was a bargain. And sometimes she was right. Sometimes the position recovered and she looked like a genius. But the times she was wrong, those times nearly destroyed her, because she would ride positions all the way down rather than admit she'd made a mistake. Her need to be right was stronger than her need to preserve capital. Eventually she learned, but it cost her. Cost her money, cost her years, cost her opportunities. The market is an expensive teacher, but the lessons stick. That's what I'm trying to save you from, not the financial cost. You'll pay some of that no matter what, everyone does. But the unnecessary cost, the self-inflicted wounds, the mistakes that come from not understanding your own psychology. When Tilray moves in Premarket, are you excited because you've done thorough analysis and believe in the investment thesis? Or are you excited because everyone's talking about cannabis and you don't want to miss the party? Be honest, really honest, because lying to yourself is the most expensive lie you'll ever tell. The cannabis industry, it's fascinating from a sociological perspective. An entire industry emerging from the shadows, from illegality to legitimacy, from counterculture to mainstream business. Historic, really. You're watching a prohibition end in real time, watching a new market form. But new markets are dangerous. They're unpredictable. The companies that dominate in year 1 are rarely the companies that dominate in year 10. Think about the early days of the automobile industry. Hundreds of companies. Only a handful survived, or the early internet, or personal computers, or any industry in its formative years. Being early doesn't mean being right. Sometimes it just means being early. And being early, when you don't have the capital to survive until the market matures, is the same as being wrong. So when you look at Tilray, you have to ask yourself, do I have the capital to be wrong for 5 years? Do I have the temperament to watch this investment potentially go to zero? Do I understand the regulatory landscape well enough to predict which companies will benefit? Do I know enough about agriculture, branding, distribution, regulation, consumer behavior, and competitive dynamics to make an informed decision? If the answer to any of those questions is no, and be honest, for most people the answer is no, then you're not investing. You're speculating, and speculation is fine, as long as you're honest about it and only doing it with money you can afford to lose. But most people aren't honest about it. They tell themselves they're investing when they're really gambling. They tell themselves they've done research when they've really just read a few articles. They tell themselves they understand the risk when they really have no idea what they're getting into. And then they're surprised when it doesn't work out. They're angry. They feel cheated. They blame the market, the company, the system, everyone except the person actually responsible, themselves. This is what I mean about emotional maturity. Investing requires the ability to take responsibility for your decisions, all of them, the good ones and the bad ones, the winners and the losers. Because if you can't take responsibility, you can't learn. And if you can't learn, you can't improve. And if you can't improve, you're going to keep making the same mistakes over and over again. I've made plenty of mistakes. Plenty. I've bought things I shouldn't have bought. I've sold things I shouldn't have sold. I've missed opportunities that were obvious in hindsight. I've held on too long to positions that were clearly declining. I've been too aggressive and I've been too conservative. But you know what? Every single one of those mistakes taught me something. And the tuition was worth it because I learned. I adapted. I improved. I developed better judgment. I built better mental models. I created better processes. That's the path. Not perfection. Not never making mistakes, but learning from them, growing from them, becoming a better investor, a better thinker, a better decision maker with each iteration. Now, let me bring this back to something practical. These 3 companies moving in pre-market. What should you actually do about it? Here's my answer, and it's probably not what you're expecting. Nothing. Most likely you should do nothing, unless you've been studying these companies for weeks or months, unless you have a clear investment thesis, unless you've calculated what you think they're worth, unless you know at what price you would buy and at what price you would sell, unless you've determined how much of your portfolio should be allocated to this type of investment, unless you've considered how this fits into your overall financial plan and risk tolerance. Unless you've done all of that work, do nothing. Because acting without preparation is how you lose money. Not sometimes, not occasionally, consistently and predictably. The market rewards preparation and punishes improvisation. But doing nothing is hard, especially in a culture that celebrates action, that worships hustle, that tells you if you're not moving, you're falling behind. Especially when you see other people making money, or at least claiming to make money, on the very opportunities you're passing up. That fear of missing out, it's powerful, it's primal, and it's usually wrong. I've missed out on plenty of opportunities in my life. Stocks that went up 10 times that I never bought. Companies that became giants that I passed on. Trends that made other people rich that I sat out. And you know what? I'm fine. Better than fine. Because for every opportunity I missed, I avoided 10 disasters. For every winner I didn't participate in, I skipped 20 losers. My returns have been plenty good enough over time, and I've slept well at night because I only invested in things I understood. That's the trade-off. You can chase every opportunity and lose sleep and probably lose money. Or you can be selective, be patient, be disciplined, and build wealth slowly but surely. Most people choose the first path because it feels more exciting. It feels more alive. It feels like they're in the game. But feeling like you're in the game and actually winning the game are 2 very different things. The people who win, the real winners, not the lottery winners, they're usually the ones you don't hear about. They're quiet. They're methodical. They're boring. They do the same things over and over again, year after year, decade after decade, and slowly, almost imperceptibly, they build enormous wealth. No drama. No excitement, no stories to tell at parties, just consistent, disciplined, principle-based decision-making compounded over time. That's what I'm inviting you to. Not a get-rich-quick scheme, not a hot stock tip, but a way of thinking about money, about value, about investing that can serve you for the rest of your life. It starts with understanding that pre-market moves are mostly noise. It continues with developing your analytical skills, your emotional discipline, your psychological self-awareness. It grows as you learn from your mistakes and refine your process. And it culminates in the kind of financial freedom that comes from making good decisions consistently over time. iRobot, Las Vegas Sands, Tilray. They're just teaching tools today. Mirrors reflecting back your own hopes, fears, biases, and blind spots. The question isn't whether they're good investments. The question is whether you're ready to be a good investor. And becoming a good investor, that's not about finding the right stocks. It's about becoming the right person, the person who can analyze clearly, who can think independently, Who can act decisively when appropriate and sit patiently when appropriate? Who can manage their emotions? Who can learn from mistakes? Who can stay focused on principles when everyone else is losing their heads? That transformation, that's the real work. That's the real opportunity. Not in these three stocks, but in yourself.